All right, so everyone, welcome again to the latest Royalty Exchange Investor Office Hours. I am Anthony Bruno, Director of Communications here. As per usual, we have our panel of staff here. We have our CEO, Matt Smith. We have our financial analyst, Ryan O'Connor. We have our general counsel, Rob Bernard. There we go. So today, we are going to get started with a quick overview of our newest addition to the Royalty Exchange marketplace, which is the secondary market. I think probably the easiest thing, I'm going to share my screen, so bear with me as I do that. And so we could actually see what we're talking about here, and then I'll kind of give you a rundown briefly of what it is before I let the experts jump in. So here we go. So this, let me make this a little bit bigger. Can we all see this?
Yes.
Okay, great. So this is the Royalty Exchange secondary market. This was launched, I believe, late last year, not quite 6 months ago, if I understand correctly. I was probably just coming on board about time that this was launched. So this is basically a collection of assets that were previously acquired on the Royalty Exchange marketplace and now, in essence, relisted here for more of just like a direct investor to investor offer type of scenario. So they're not auctions. There's not like a multiple bidding live sort of countdown sort of thing that you see in the auction house. This is more one investor could see it, make an offer to the other investor in real time. It could be accepted or denied or ignored or whatever at any point. So it's a little bit of a different format, but the same basic idea. And it's a little bit limited in the assets that are available. For starters, these are only assets that involve payments from ASCAP or BMI. So essentially they're public performance royalty assets paid by the U.S. performing rights organizations, ASCAP and BMI. That's what they're limited to right now. So that's one. And two, they typically don't appear on the secondary market until we have received the first payment from ASCAP or BMI, which means once that's been paid, it's entered into our administration system basically, and then we're able to add it to the secondary market after that fact. So there's a delay, typically, I don't know, like a month to 2 months at most, I think.
Yep.
That's right. So that's sort of the rundown of what it is, what it's for. The idea is to offer a bit of liquidity to owners of these assets so that whether you want to actively try to sell it, you can put up a list price and say, hey, you know, I've collected what I want to collect from this, and now I'm offering it to others. It also, if you're not thinking necessarily of selling the asset, but you're getting offers, you know, you might consider it if the offer is good enough and that sort of thing. So that's sort of the idea behind it as well. So that's kind of the rundown. Am I missing anything?
No, not really missing anything, but I'll add a couple of things. Number one is that one of the advantages, well, I should say first, the assets that are listed here are all things that have gone through the auction house that meet the criteria that Anthony already said, unless the investor has explicitly asked us to exclude their asset from here. So There are some that have been, specifically excluded because that's the investor preferred it that way. We think in general, it's better for you to have it listed regardless of whether or not you're actually, looking to sell it in an urgent fashion or not, and I think that the main thing I like about it is that you get a bid on your catalog regularly. So basically you can see essentially what investors in the secondary market thus far were willing to pay for this catalog over time. And so you get kind of a, these are income assets and people buy them for the income, but it is interesting to know how the market values them and how those values change over time. And by having them listed, you get price information from the market, and you can get a sense of whether it might be a good time for you to sell, or or that you should hold on longer. But without that price signal information, it makes it really, really tough. So we think it puts all investors in the whole ecosystem in a better spot when there's more market information. So we think that that's a good reason in and of itself. Now there are both term deals in here as well as life of rights deals. And the term deals, because this is a secondary market, meaning these assets were sold already through auction, most commonly through auction, and and the original 10-year term period started upon that original sale. You'll see that these actually have the amount of time remaining in the term. It's listed in that far left column that shows you, how much time is left in the term. So there are both life of rights and term. And whenever it's a term, it'll tell you how much is actually left in that term.
Right.
I think it's probably worth just looking at one of the listings, Anthony, and just so we can show people kind of the information that's available within those.
Sure.
It was one of the benefits, I think, of having this also is that for people who are new to royalty exchange, new to music royalties, this gives you an opportunity to see a whole bunch of different catalogs and really how they're performing. You get to see, you get to basically see, what their top earners are, what the sources of income are, how that income has changed over time, how dollar age is a factor in, the current earnings of a catalog. So there's
Is
a lot
there
of
a particular list you want me to open up?
No, it doesn't. I don't think it really matters. I just want to show people generally what information
Right,
is.
I'm just going to the very first one in the featured listings then. So here we go.
Okay, so on this detail page, just to go through this real quick so people are familiar with it, the earnings of this catalog in the last 12 months, what it's earned, the average annual earnings over the last 3 years, dollar age, of course, lifetime was earning of that catalog, how many tracks would be included. In this case, there's only one. Type, and this is where it's life of rights or term, the time remaining if it's a term, and essentially the date of expiration, at what point it would revert back to the artist, to the original seller. I know we had a question about last transaction price. What this is this is the price that the current owner paid for it in auction on November 2nd, 2018. Okay.
Yeah. Now, quick question, Matt. If this asset had already transacted on the secondary market and one investor bought it for another investor, that last transaction price, last transaction date would switch to
that one. Yep.
To that one, correct? Okay.
Yep, exactly. So this is information, you see a lot of the same information whenever you go to the auction listings. It breaks down the source of the earnings. It breaks down, if there's a number of different songs, that it break down, which of those songs are, shows the earnings over time in the chart, international and domestic breakdown. And then there's the included rights table at the bottom here, or at the bottom of the screen. And this just, for a lot of these assets, they're exactly the same because they're all ASCAP or BMI in terms of what's included and what's not. But we find in this table we use in all of our auctions, and we included it here because knowing what's not involved in these rights is often as important as knowing what is involved. And so we include that here as well. There's also media links, if there's, depends upon the catalog, what we actually have available there. But for this, it's one song, and there's the YouTube link for it, so you can see what it is. What else can I tell you about it? I think
maybe off to the exactly the right side.
So what this is a list of actual offers that have been made on this catalog so far. Now you can see that there's basically a fixed amount that has been made over and over again, through a standing order. So our all access members can place something called standing orders, essentially where they define the kind of catalog they're looking for and based upon quantitative characteristics, and they can place a maximum bid. And then when there's catalogs that are listed in the secondary market, an offer is made on those catalogs sort of automatically. And those offers last for 24 hours before they expire. So what's the benefit of this? Remember when I mentioned that you, as the holder of this catalog, to know what the market is willing to pay for it over time is really useful information. So, because this investor has it listed at, for almost $14,000, which is, a 5.6 multiple on something that has, doesn't even have 8.5 years left on it. So it seems like they're asking a lot for it compared to the multiple in the earnings in the last 12 months. And there's a automated offer, essentially, it's made by an investor on a daily basis that's been coming in for several days in a row for $67.94. And you can see that price is not going up, but it's not going down either. I mean, meaning they're not being beat by another investor, sort of outbidding them on it. And there aren't any other offers where people looked at this catalog in particular and said, hey, I really want this one, and placed a direct offer on it. And so if you're coming in and you're looking at this catalog as an investor, considering whether or not to place a bid on this catalog, when you come to this page, you click on the make offer button. Assuming you're a verified investor, you'd be able to make any offer you'd like at this point. So, and and these offers, they last for 24 hours, after which they, if they're not they can be accepted or rejected by the seller immediately or within that 24-hour period, or they can ignore it, in which case it'll just cancel. It'll just expire.
Right. And I just want to put on a couple things real quickly here. So, like Matt mentioned, the offers that you're seeing here are done through the automated system. So it's not as if an investor is on this page looking at the list price and then making the same offer and over again. But if you were to be interested in any of the assets and you see, not all of these have list prices. Not everyone who owns an asset has set a list price. So
Right.
sometimes that's just blank, okay, which gives you no real direction for what they might be willing to sell it. But if you do see a list price, some of them are high because they just might not be very interested in selling unless you make a very, very high offer. Um, but generally, it's a guidance for if you're interested in the asset. Here's sort of where the owner's mindset might be. So
Well,
that's something that's worth putting in.
at the list price is they are committed to sell at that price. Okay.
Yes, there's that as well. Yeah.
So you could, like, in a way, there's a negotiation that can happen with these. If you want to buy it, if you think that price is reasonable, you can just buy it immediately, and the seller is already committed to selling it. Okay, so you can do that. Or if you feel like 13.9 is a lot, but 11.9 is reasonable to me, and so I'm going to place an offer for 11.9. Maybe they end up changing their list price, lowering it a little bit, to kind of meet in the middle. So that's their I'm obligated to sell at this price.
Right.
So they're instructive, but I wouldn't say that they're necessarily indicative of any particular state of mind of the seller. It's just some of it's just the market is, people want to see how the market will respond to things. Sometimes people do, sometimes by throwing out a high price, just like if you're putting in bids, some people think, oh, maybe it makes sense for me to put in lowball offers, right? Because maybe they'll accept it. Well, the same thing works on the other side. Maybe I'll put a high ask offer and maybe somebody will accept it. So, the communication of more information is what ultimately leads to effective sales here.
Right.
Let's talk about the analyst benchmark real quick.
I was just going to mention that. So there you go. Go for it.
And we should look at another auction or another listing that will have some bids that are manually placed instead of just this one. That we see.
Sure. And just so you know, you won't see analyst benchmark on my view since I am not an all access investor. So
I'll just for sake of clarity, I'll just explain what all access or what the analyst benchmark is. It's also, we are changing it. This is a good one though.
Oh, you want to go this one? Okay, hold on. I'll go back.
That was fine because while these automated ones, you see different prices there. And I think this is, again, I think that they're asking, 8.3 times last year, and there's only 8.8 years left on it. Obviously they're asking for a lot for it, but you do see the price, significantly different prices or offers made on the catalog over time, right? So, there was one for 14, 24, like the offers have gone down on these, right? So as a seller, as a owner of this catalog, it is interesting to note, what the price action is, what offers are available for your catalog, and whether you sell or not, because most people are buying these with the idea that I'll be happy if I could just get the income from them because I can't get income elsewhere. Still, though, it's important to know, I think, as an investor, what the market price of your asset might be. Now, of course, as we get more, as the market gets more and more activity in it, then I think these prices will be more affect real market prices. Like some of these, obviously, jumping down to 1,000 from 24,000 seems, it's all over the place. So let me talk about analyst benchmark. Analyst benchmark is essentially, it's the criteria I use personally to make, I would buy any catalog sight unseen based upon. Okay. So, and it's a very simple formula. And that formula is essentially, we audit, and I've discussed this formula in one of these other calls that we've done before. But what we're essentially doing is we're adjusting that formula so that it fits the time remaining within the catalog. Otherwise, you have to do the math. It just takes a long time to do the math actually on every single deal, because if you're saying, I'm willing to buy anything under these parameters, but then, they all have unique time left in them. So what it essentially is that for anything, I, what it's based on now is that if it's a term deal, then it's the dollar age. I'll pay the multiple of the dollar age up to 4.5. That's what it's set as. So if the dollar age on, this one, what is the dollar age on this one? It's 17, it's 18 years. This is a really old catalog. That's great. So, so in my automated formula, essentially the one that I use personally to buy, the cap I'd be willing to pay on this is 4.5 times the LTM. But then that has to be adjusted for how much time is remaining in the term. And the calculation gets done automatically for people who are all access members. They can see what the analyst benchmark price is. And it just makes it easier to sort of sort through the different catalogs into place offers, based upon, using my benchmark essentially to make your own based on what you think is good for you.
Right.
And now I will say it's going to change. We're changing this soon, because what we're actually going to do is within the next, I would assume 30 days, what this will actually be is it'll be the median price paid for a catalog of this dollar age. So rather than using the formula that I use as like a, sort of shorthand, it'll be the median of all the catalogs that have actually transacted within these dollar age cohorts. So in some cases, it's more than what my default would be, and in some cases it's less. But and it'll be updated regularly, with the median that the market is actually paying for these things.
Would it be worth, so most of this figure, this analyst benchmark figure, is based around this dollar age calculation that we've been discussing. But Matt, would it be worth maybe letting Ryan chime in on some of on the other two things to look for to kind of maybe tweak that up or down across the base and the center line? And Ryan, if you want to jump in, I know you typically, the dollar age is the main metric to look at, but then if you want to tweak it, you look at things like source and trend rate. So if you want to maybe speak to that a little bit, perhaps.
Yeah, certainly. Like you said, source would be one of them. Really looking for that online streaming to be a high percentage. Again, I typically look for 30% or greater, and I use that 30% number because it's not too little, or not too little that it's not making an impact on the catalog. It's also gives it plenty of room to grow, right? And that's going to tie right in with our second thing that we would look for, which is in that recent earnings chart. Tend to look for an upward trend, right? Like that can be harder to find in music royalties. So maybe something that's not decreasing rapidly, or something that may have grown in the last year, will really help you, give you a guide to where the catalog is going and how fast it might be getting there. And, if those things are in your favor, you can certainly pay a little bit more for it, above and beyond that analyst benchmark, that sort of thing. Obviously, if those things may be declining a lot, they're, like in this catalog, there's not a lot of online streaming, you might not want to pay as much as that analyst benchmark, stuff like that.
Yeah, and this is a tough one because so much of the earnings in this are international, and unfortunately, the way that it's not very transparent, the real source of the international earnings. So it could be that these are all international online streaming. It could be that just some, but it's actually very difficult to see that. So normally, what we would do is you take whatever the international sources is, and you disperse them in the same way that all the domestic sources are distributed. So, if whatever percentage of them are online streaming, you would take the international and you would allocate that portion of it for online streaming, and then whatever is left for TV and film and so forth. So but it's on ones where it's international, it's much more difficult. And I also will say that international is often very delayed from the domestic stuff. So, it could be that if you looked in the raw data files with this, that in 2016, that there were really strong domestic earnings, and then it really took until 2018 to realize those earnings internationally. So, in any case, it's much more difficult when you're looking at when you're looking at whether international earnings are a big part
Yeah,
of it.
primarily international earnings. Ryan, do you have something else you want to add?
Yes, yeah, that's a great point. And just on that chart, like it's easy to gloss over the two, like you kind of see the stacked bar. It can be easy to gloss over the blue and the green, right? So when you look at that, just take an extra second, make sure, hey, did the international actually pay out yet or did it not, right? Because, that last bar may look like it's a declining trend, but that just could be because that international hasn't paid yet. Right. So if it hasn't paid, that I believe it's the green bar, or sorry, the blue bar would be missing. Right. And that's how you would know that it hasn't paid yet and there's still something to be paid on it. And then just one other thing I was going to mention if you scroll down a little bit, keep going below that media link. Okay. In that other information, if it did transact, if the last transaction was in the auction market, there will be a link back to that original listing in the auction house. So if you wanted to gather some more information, what was the bidding activity like when this was originally listed, that sort of thing, that information will be there as well.
All right. We'll go back to the main, I think. Here we go, back to secondary market. All right.
A couple other just quick things I'll say about the secondary market, and then we can get to questions that people might have. About 2/3 at this point of the people who place their first bid or offer on any catalog on Royalty Exchange are doing it in the secondary market now. So that's where people are often starting. And we don't highlight this at all. It's buried in the website even. And so we felt like it was worth taking some time to just explain it in this call. So that's why we're doing this. We have a number of features that we'll be rolling out over the course of the next 6 months to improve the secondary market. We've done a couple things in the short term to make it a little bit easier for people in terms of the filter settings that you can see at the top there. You look for the new catalogs. You can look for catalogs with the highest dollar age or lowest dollar age, catalogs that have a list price, catalogs that are life of rights only, the LTM sizes. There's lots of different ways you can sort of sort through it to figure out, which ones to look at, because while there aren't, we've done, 850 or so deals so far, there's only 180 currently listed in the secondary market, but it's very difficult to look through all 180. There's really too many. So, the filters do make that a lot easier for people.
What's good about the filters is it shows you in real time. So like if you really, one of the things I know that people have a eye towards is dollar age. I really don't want to see anything less than a 5-year dollar age, but if you change it up a little bit, you can see how things are dynamically added once you change your filter. Because you might say, okay, I only want things with a 10-year dollar age. Well, there's only one listed.
There's only one with that LTM size.
With that LTM size, exactly. Excuse me. So like there is that. See, so this lets you really quickly sort of adjust. You might think you have a firm number in mind, but if you just tweak it a little bit, you can kind of see what the availability changes to as a result. So they're good little tools to play with if you have a pretty good indication in your head about what it is that you're looking for.
And then can you click on that, like the 3-dot hamburger, whatever they call it? Yeah. So basically you can show which ones to totally exclude, from here, or which ones to show only. And this makes it, the combination of this plus the filtering around, specific LTM targets or dollar age targets, really does effectively allow you to drill down on certain assets that you're interested in. And it's just a great tool, I think, for trying to learn more about music royalties by being able to see what these things are actually earning and, how they're performing over time.
Yeah, one other thing, an important tool I use to actually just kind of watch watch secondary markets, that little star on the left-hand side, you can favorite things and save them to, view them quickly for later.
Yeah, if you click one, it'll basically save in your favorites and it'll kind of be at the top of the screen for you.
Well, then what you just do is you simply
show
my
saved listings.
Where are they?
One more down.
Okay, sorry. And you could even show the filled ones too if you want, so you can see what it went for.
Yep.
All right.
Great. Okay.
There we go.
Get to some questions.
All right, I'm going to stop sharing now. I'm going to switch over to questions. Bear me one moment, please. I'm going to change my view. Okay. So let me go to the questions that were left in advance. I'm going to see if I could filter through these real quickly to get to the secondary market ones first, just since we've been talking about it. There's a question about updated market. Well, let me skip that one for now. Why do so many of them? So why do so many of them? I'm assuming listings in the secondary market say expired. I think we answered that. It's because
Offers made that are not responded to after 24 hours automatically expire.
okay, let's see. Okay, so there was a question here at the end. Can you clarify which assets end up on the secondary market? I'll just reiterate, those are basically the only assets that are on the secondary market are those earning public performance royalties from ASCAP or BMI, and that have had their first payment since acquisition on the marketplace paid through the system. That is
and where the owner of it has not explicitly said that they don't want it included, which the vast majority of people want it included.
Right. So there's that. And then there is one bit, and this is actually, I think, a very, very valid piece of feedback that I've sort of felt myself, but it says, I'm confused by the last transaction price listed on some secondary market listings. Basically, what you'll see is the last transaction price will be stated as one amount, yet the offer history, there's like 5 offers shown. The most recent offer that was listed as accepted was different than, I'm sorry, the most recent offer of, in this particular case, 17,000 was accepted according to the offer history. So why is the last transaction price not 1,700, which would have been the accepted offered, instead of the original 16,000?
Well, what we're doing
is
we're keeping a record of listings that when they actually get filled or sell in the secondary market, we leave the information there. So essentially, you can see the last price for the seller, what they bought it for, essentially, okay, what they bought it for, and then you can see all the offers that were made to them, and if they're and the price that they accepted a sale at. So you'll be able to see what their cost basis was, and what they sold for. So so that asset that where you see if there's an asset where you see a filled price, that asset is not available for you to buy right now. Right now, when that is relisted, that filled amount will be the last transaction price.
And just to clarify, because I get confused by this myself, is there a lag between, okay, there's the accepted offer versus it's gone through diligence and it's gone through the whatever components that we need to verify before the sale is actually finalized?
Well, so far what we've done is we've not relisted it. When things have sold once in the secondary market, we have not relisted those yet. We're basically for a couple of reasons, but ultimately they will all be relisted again. And then when they are relisted again, that offer accepted price will become the last transaction price,
yes,
when they're relisted. But because they're not open for you to place offers on right now at all, so it's frozen in time. So if you're looking at just filled catalogs, just transacted secondary market catalogs, then you're going to see the price that they paid for it, so the cost basis, and you're going to see in that area where the offers were the accepted offer price. Does that make sense?
I think so. And if this, obviously people can always chat in via the Q&A if they need a little more clarification. But thank you. There's a lot going on, so it's one of those things. I think we'll continue to evolve it further as we understand how people use it. So here's some broader questions I wanted to get into real quickly. One of them, great question. How do I calculate returns from my investments? How do I compare to returns with other investments like stocks or gold or even dollar inflation?
Yeah. So, I mean, the way you would calculate it, so I guess the basic way would to be, take your cash flow over your purchase price, and, if there's a term advance auction, make sure you're kind of amortizing the amount you paid for it every year, right? And you would just compare that to the price appreciation and, the price of gold or, stocks, whatever it may be that you're comparing to. If you have a catalog that you bought and then sold, again, for that, you need to take in the price appreciation from, your cost basis for what you sold it to, plus all of the cash flow you've earned in kind of in the middle of that, right? Between the time you bought and time you sold. These assets are a little bit unique in the sense that they actually produce cash flow, unlike gold and some of the other investments that you may be invested into as well, and the amount of time that it takes you to kind of receive that cash flow as well. So it's certainly something you take into consideration.
Yeah, I mean, one of the people often compare investments based upon price appreciation only. I bought as a guy who owns gold, I buy gold at X price, and I can see that, and I get a market price essentially on what gold is worth today. And I can say, well, although I haven't made that much money between what I bought it for and what it is today, because I haven't sold it and I don't really get it until I sell it. Part of because gold doesn't pay any dividends, then the only thing you have is that price appreciation change from what your cost basis to what you actually sell it at. In the case of that's the part of the point of the secondary market, and we don't have the bidding liquidity yet to be able to for it to really produce a true market price for you. But that's the same idea, is that you'd be able to calculate, you'd be able to know what you paid for a catalog, and then you'd be able to know what the market would pay for it today. And so then you'd be able to see what that paper appreciation is. And you'd be able to then compare that paper appreciation and your royalty catalog to paper appreciation within gold or something like that. But of course, to fully understand, compare the two, you have to add all of the income that's come in from the catalog in the time that you own it. The dividend, essentially, think of it as dividend disbursements if it was a stock.
Great. Another question here. Can you allow the owner of an asset an option to select how serious they are in looking to sell the asset through the secondary market?
Yeah. Well, it's hard to really know if people are, I think that people often assume that people are less serious because if they have a really high at list price, or they assume that they're not serious if they don't have a list price at all. And I just don't think that either one of those assumptions are necessarily true. There are bidding strategies that people use when trying to buy things, and there are selling strategies that sellers will try and use to sell things. And I know a lot of people, when you buy an asset, you buy it generally with the intention of holding it for more than 6 months. But when a great offer comes across your desk, most investors would definitely consider it. And I think that that's the I wouldn't. The question you asked though was, is there a way that they can indicate greater interest? And I think that what it is, there's a feature that we'll be rolling out soon that I think allows us to does this pretty well. So right now, a seller can have a list price, but that's it. And all other offers essentially that are made to them, you have to wait this 24-hour cycle for them to expire, unless of course the investor is going to go and reject them. And I think that feedback loop is not really very effective. It's just takes too long. So sellers will be able to list a minimum offer price, meaning I'm not willing to, if someone offers below a certain price, have it automatically rejected so that they get instant feedback that I'm just not interested in selling for that price. You don't have to wait 24 hours for it, right now. And that feedback loop should allow bidders to essentially understand how what the sort of the bottom line, like the lower end limit is for sellers, and it should give you some indication at least of who's more serious along the way. That's the idea anyway.
Right.
I'm open to other suggestions about how to do it. I mean, saying if you're a seller, you don't ever want to say that you're really interested in selling, right? So like from a seller strategy standpoint, they're unlikely to indicate that they really want cash today because except for having a lower list price, because otherwise it undermines their negotiation position. But I'm open to suggestions on how you guys think we might be able to achieve this better.
So there's another question here that kind of speaks to that same point a little bit in terms of features, which is, will the ability to counter an offer be a feature added in the future?
That is something that we have on our development timeline. Yes, we're going to add the minimum offer feature first because it's simpler to deploy, and we think does resolve a lot of doesn't require the the seller, the investor, to be actively engaged in counteroffer. It can just have like a minimum price that'll give quicker feedback, quicker information to the bidder.
All right. A great question just came in, again, related to secondary market via chat that I want to ask real quick, which is to say, is the only way to list your asset on the secondary market to be an all access member? And also, then real quickly, what are the typical fees associated with selling an asset on the secondary market?
You don't have to be an all access member to list your asset in the secondary market. The presumption is that if it's listed in the secondary market, it has already been sold through the primary market, meaning it's already been sold through auction or through our order book, in which case you would be an all access member. So if you're interested in listing your asset, there might be some technical constraints if it's not a PRO royalties, but we are interested in expanding it beyond the PROs. So if you would like to be one of those test cases, like, reach out to us and let's see, maybe, perhaps your catalog could be that test case that might be a publisher royalties or something like that. So we can expand. Now, in terms of the cost, Rob, I don't remember actually what are the fees associated with it right now?
I don't know off the top of my head. I think something like 8.5%, and if you're an all access member, it's
20% off of that.
20% off of that.
Yeah.
So basically, right, about half our take from the fees associated with what's sold on secondary market is about half of what it is on the auction house.
If we're originating an asset, and of course the investors aren't aware of that, but if it's the seller who's listing an asset for the first time going into an auction, our normal, what you call a take rate, is 15% on that transaction that the seller pays. So this is lower than that, and I should say, we're price testing what is the most effective take rate for us to have as a business in the secondary market. By having a lower take rate, it increases market liquidity. We're happy to do that. That's why we already started off at a rate that's half of the origination rate. That's a lot less work, obviously, as well, for us to list something in the secondary market. It's already gone through due diligence.
All right. Another question, and I'm not sure I fully understand it, but I'm going to ask it here. It says, when will we have the opportunity to bid on, quote, PRO royalties in the secondary market? And I think during the course of this conversation, we've pretty much cleared that the only assets that are available in the secondary market are PRO distributed royalty assets. So I hope that answers that question, but if not, please chime in with the Q&A or get back to us otherwise. So let's see here. One question was just basically an update on the marketplace changes. I think we've discussed the filtering ability that we've recently launched and added to the secondary market. We've pointed to some of the updates that we plan to add to the secondary market, which is the ability to set an offer floor, the ability to do some counteroffer components, and I think there is a bit of a longer term intent to add more types of royalty assets to the secondary market. Are there any other recent changes we should be addressing?
There's a whole bunch of things on the development, on our development plan to increase the ability to match catalogs, so that basically when you come there, we can better define what types of assets you're looking for, and then match you up with those in the catalog that sort of match what you're looking for. We have a number of things in the funnel for that, but we got some great feedback last week from a number of investors who have assets listed in the secondary market. And I mean, we're studying the data about how the secondary market is used, and we are very, very open to feedback about what we can do to make it better for you, regardless of what side of the market you're on.
Okay. Next question relates to, what is the average earnings decay per year as it relates to dollar age? Brian, you look at this stuff quite a bit. You want to jump in there a little bit?
Mm-hmm. Yeah, and it's hard to give an actual average, right? Because it really depends on what the source of those earnings are. When you look at a catalog, and I mean, and a good example is a 5-year-old country catalog versus a 5-year-old hip hop catalog. Those are completely different. So an average is kind of misleading, I would say, at best, right? And you really want to look at it on a catalog basis, including that source information, with the dollar age and look at it that way.
Yeah, we've talked about, we went through in another one of these calls, we went through a listing that was an auction listing, and within the finance tab, there's the raw data files. And, we definitely, if you didn't, I don't know which date the office hours was, but I would encourage people to go back and watch that, because Ryan takes us through downloading the data and how he would then look at that data in an Excel spreadsheet, and then broken down essentially by source. You can see how things are performing over time and see what the decay rate is for that particular catalog. And I think it's really important to see it, because while you might have a very strong decay rate in radio, you have a huge, improvement in income in streaming. And so it's really the intersection of all those different sources of income that really paint the picture of what a catalog could be worth.
Okay. And the kind of a related question here is that many offerings appear to be life of rights plus 70 years of the author. What % of deals are expected to continue producing income past the 10 or 20 year mark? I don't know if we have a hard percentage to give, but
I would say that's hard, but I mean, we've seen plenty of catalog. Like there's one that was from, I think it was called the Charleston from 1929 or something like that, right? There's a ton of stuff from 2000, early 2000s, late 90s that are still producing income.
I hope I'm not saying anything better. We have an REO Speedwagon one coming up soon. That is, how was that, 40 years?
Yeah. Yep, I think it was 39.5. Yeah.
I think that exactly. maybe now's the time to kind of point back to the dollar age component, because that's really the question, right? Like if it has been earning for 20 years, the likelihood of it continue earning for 20 years is greater than if it's only been earning for 2 years. I mean, it's one of those things where we're not music, forecasters, but we.
Mm-hmm. There's all kinds of things that are going to influence what is, how things are earning in the future. A lot of it's going to be the formats that are dominant 2 decades from now, which are probably formats that don't exist today. It's the same as streaming didn't exist 2 decades ago, and no one would have predicted it. The advent of streaming made it so that older catalogs benefited dramatically, because it used to be just by selection. In a record store, you could only get some of the staple classics, and then you get new releases. That's all they could hold in inventory. So as you switch to streaming, now more than half of the streams are now what is considered deep catalog. These are things that have been out for more than 3 years. And in the music business, that's considered deep catalog. It's more than 3 years old. So it's impossible to know what that'll look like in the future, although access to much, all of music seems like that's going to be a big part of it, no matter what, no matter how it boils down. So it's impossible to see how that's going to look, and it's impossible to see the way consumers' tastes are going to change over time. But the single greatest indicator, we believe, is the dollar age. And it's just the simple thing we talked about probably in every one of these calls. And that is, it's the what Nassim Taleb calls the Lindy effect, which is just something, if something has earned for 10 years, it's likely to earn for another 10 years. It doesn't mean it won't earn for another 20 years. It just means that it's more likely to earn if it's earned for 10 years, it's more likely to earn for 10 years than something that's only been earning for 5 years. And that rule of thumb is incredibly useful.
Yeah, and that's a great point. You kind of want to combine that dollar age, especially with the kind of new format, right? And I mean, a good example is that we had a niche band here in Colorado that actually sold. They're a metal band. I believe they were like 5 or 6 years old, right? And with the streaming in Spotify, they found a niche market that is most likely going to keep listening to them, right? They don't have to go to the store and buy those CDs, that sort of thing.
All right, and in the same realm of topic, basically, there's one that came in live Q&A. How does the potential termination or reversion after 35 years affect the valuation of life of rights royalties, and can this happen to any of the assets that we operate with?
Yeah, I can jump in there, and I guess as kind of a background. So the U.S. copyright has a provision that allows an original creator to terminate any assignment of that copyright after 35 years. So really this applies to a songwriter who has signed a publishing deal. I guess really kind of the point of it was they could make a bad deal at the beginning of their career. And then after 35 years, they have the right to terminate that copyright assignment. And the important part, as far as we're concerned, is the copyright assignment. right? So what that gives the songwriter the ability to do is cancel their publishing assignment. But for our purposes, the vast majority of deals are PRO deals that our seller or the originator was the songwriter themselves. So for our purposes, there's not a copyright assignment to terminate. So if the seller songwriter terminates their publishing deal, that would have no effect on their songwriter copyright royalties because they're the ones that originally sold it to us, and there was no copyright assignment involved in that. Now, when our seller receives their royalties by way of a copyright assignment from a songwriter, so if our seller is a publisher, then that termination provision could affect the rights to receive royalties going forward. And in those cases, what we do is on the original auction listing, we'll say, hey, the term of this assignment is for X number of years, at least X number of years, because there is this possibility that the underlying songwriter could terminate the original copyright assignment.
Yeah, so basically what we do is we kind of note that this is a possibility and this is the time frame that you're guaranteed to receive income, after which there's a question mark, and then it essentially allows you as the investor to price accordingly.
Right, and another thing about the termination provision is it's not automatic. There are some steps that the underlying songwriter or artist has to take, and it's a little bit convoluted on windows of notification and things like that.
It's cumbersome for the artist, yeah.
Yeah.
To be on the safe side, we list that this is a possibility and this is the year that it could happen.
Let me ask you a question. How many times has this actually happened on our marketplace, Rob?
How many times
have we had to list an asset on the marketplace with this consideration in mind? I could think of one, so maybe I'm.
I would say a handful. I would say it's probably 10 or 12, maybe.
Oh.
I mean, certainly the vast minority of the deals that we do, but we do have certain publishers that come to us that receive their publishing royalties because back in the day they had a songwriter who assigned them to them. So it can happen. It's certainly becoming more popular in the industry now. I think you saw Paul McCartney a few years ago started doing all of his terminations. So
well, when we have Paul McCartney on the marketplace, there'll be a lot of attention paid to that. I'm sorry. Go ahead real quick, Ryan. We got a few more questions I want to get to.
On the valuation side, we'll cap it as if that was going to be exercised, and that's, as an investor, that's probably best that you would do that as well.
Okay, real quick, just a few more questions. Have you seen a shift in buying or selling trends in the royalty marketplace during the pandemic? Do you want me to start?
Well, yeah, go ahead and start.
Okay, well, so on our marketplace, I mean, in general, in the music industry, not necessarily. Time will tell. I mean, there's been some delays in payments from the PROs, but the payments have come through in full. So that's about the only, I guess, macro trends that we've seen. Streaming subscription rates don't seem to have been affected. Some activity had some short-term bumps, but activity doesn't really matter. It's really more about the overall number of subscribers that seems to be going up. In terms of the marketplace, I wish Gary was on the call. From what I understand, we've actually gotten quite a bit of more interest from seller side, just because people that are affected by their touring income have a greater motivation to monetize other parts of their their work, basically, which is what we're a resource for. And in terms of the buyer side, the investor side, we've actually seen an uptick in activity as well. I think April, we had more investors register for a new account on Royalty Exchange in this past month of April than any single month in the company's history. So if that's an indication, it seems to be interest is still high. Please jump in.
Yeah, no, so I'll say, I think from the investor side, despite this, very strange time in the markets, the yield is harder to get, than ever. I mean, as even if it gets more chaotic, it's not going to necessarily solve that problem. So I think the investor demand is still there, definitely. On the seller side, a lot of artists are in a bad position because so much of they planned their life around doing things live, whether that be touring or whether it be just even doing other, getting in the studio together and doing, maybe some songwriters might outsource, do some production work out on the side, to supplement their income. And all of these things have been thrown into the air. And so there's artists are in an awful position, honestly. And, it's positive for our business. I wouldn't trade, honestly, having this happen to them to be positive for our business, but it is definitely making our phone ring more and bringing more interesting assets to the platform. And our goal is at least to give them an environment where they can get, fair market value for their assets.
Okay. Quick question. Could you clarify the personal benchmark formula again used on how to adjust for non-lifetime rights assets?
Okay. So, it's and actually the formula I think is on the website specifically. I think it's specifically articulated on there. But essentially, assuming it's a full term, if it's a full 10-year term, then I do the dollar age of the asset as the multiple of earnings. So if it's 2.2 or the 3.2 dollar age and it earned $1,000 last year, and there's a 10-year term, my offer on it would be $3,200. Okay, so that's the simple formula. Now it would get adjusted so that if there's only, let's say, 9 years left, that it would be $320 less than that. It would reduce it by 10% because the total term is 10% less. And so it's a very simple formula. It's just calculated automatically for you so that you can it's just meant to be a benchmark in your own thinking.
It's a benchmark center line that says, okay, this is generally around where you might start your analysis, and then you can take it where you need to take it based on the other factors of the catalog.
Exactly. And like I said, it will be the median price actually where actual transactions have occurred for that dollar age cohort in about 30 days.
Okay. Another quick question. When do we expect we might have the ability to invest in publishing royalties via the standing orders?
Via standing orders, that's different than the secondary market. But actually, I'll have to check with the developers and see what the time frame is on that. I know it's something that we have been working on. We just still, most of the assets that we see are performance royalties. So that's
right.
Our market caters to those more. But there definitely are some publishing royalties that could be listed there.
Yeah, doesn't it depend on our ability to automatically sort of ingest the history?
It doesn't have to be done automatically.
Okay.
We could do it through a normalized routine. We don't have to necessarily have a connection to that publisher to download the data directly, but
okay,
it's helpful if we do.
Right. It's just got to be some sort of a more, because it is a standing offer and it is a timely aspect to it. It has to be something that can be done relatively expeditiously, to put it to that, right?
Exactly. So like all the PROs, all of their earnings these are the most recent. These are the complete earnings. So when a new statement comes out, it's automatically downloaded and added to that listing. So you always have accurate, up-to-date information on every catalog. And to be able to list publishing assets, we have to have confidence that we're doing that at the same level.
Sure.
Yeah, there's just a little bit more that goes into the due diligence, and it's a little bit more manual too, with active songwriters and costs that may be associated that don't feed through directly to the CSVs. So.
Another question was basically, can you address what we did to safeguard and prevent the automated lowball offers that some received a few days ago? We sent an email out to everyone that has assets in the secondary market just the other day that explained the situation. Essentially, someone had some sort of automated program that was just going through the secondary market and just placing offers on everything with very, very low, clearly not serious offers. And
they were serious to them. But I don't think that no seller could reasonably think that
right
accept it. Yeah.
Well, yeah, it's not. I mean, because it was automated, it's not really clear if it was a serious offer, or if it was just testing if their system worked, or there's a lot of things that went. So basically,
he was a verified bidder. He was a verified bidder, though. Yep.
Okay, good. That's more information that I knew about. That's great. But essentially, suspended the account temporarily so that the offers would not continue. And Matt mentioned earlier, we do have fairly soon, I hope, that we'll be having the ability to set an automated rejection floor to every listing that says anything that's below this, just you won't even see it. It'll just be automatically rejected.
Right.
and everything will happen behind the scenes, so you won't have to be bothered by those.
Yeah,
So
and
that's
I just want to say there wasn't anything nefarious
wrong,
done
right?
by the bidder. It's just annoying to people who have assets listed to get a number of really low bid offers that, and it's just annoying. And so we want, I don't mind if people who are verified bidders build engines to be able to place bids automatically. I have no problem with that. In fact, we'd probably work with them to help them do that if it would actually contribute to market liquidity. I think that the thing is that the listing owners need to have the ability to reduce that annoyance, and that can be done quite simply by just having a floor. And so we suspended his ability to place bids. Not again that I think he was really doing anything wrong, but just be out of sort of a marketplace hygiene approach. And we will renew his ability to place bids as soon as we have a feature that can protect you from annoyances.
Right. It's just it's got a little bit ahead of the control component there.
Yeah.
So real quick, we only have a few minutes left. I saved these last questions, basically 3 questions left in advance. They all relate around to a first-time investor or a small amount to invest. How do we recommend first time with smaller amounts to get started in the royalty investing process?
Yeah, I mean, I will say that, all investments are risky. I'm not an investment advisor, but I think, and so don't take any of this as investment advice, but I just think of whoever's asking this, imagine that you're my mother or my father, or my brother or sister. And I'm just imagine that you're asking me that question. And I would just say that you just, when you're looking at anything that's new to you, that you should be extra cautious and spend way more time in due diligence and feeling comfortable with the asset class before you think of putting a dollar to work. I think, as a general rule, anything that isn't, any investment that's not guaranteed, you shouldn't, you have to recognize that it can go down in value and it could end up being an awful investment. And that's not that I think that music royalties are, have that potential more so than anything else. I think that the stock market is pretty scary right now too. But you have to recognize that those things are out there and there is real risk in it. So if you're talking about just dealing with small amounts of money, you can have, I recommend starting with a small amount of money that is a small amount of money relative to your portfolio, so that as a way to learn and better understand the asset class. So if it doesn't perform the way you hope or expect it to, it's not going to have a devastating effect on the overall returns of your portfolio. So there are smaller assets that do get listed in the secondary market. Very rarely do they get listed in auctions, because it's a huge amount of effort to get them listed in auctions. And you can take a look at them and see if there's anything that you feel like is appropriate for you. I would just say again, if you have just a small amount of capital, then my personal belief of what I would tell again my brother or sister is that savings matters more. Like if you don't have a lot of money, if you don't have a lot of liquid cash to invest in something, then especially in a time where there's a lot of uncertainty in the world, I would keep it in cash today, because there might be opportunities to buy things on the cheap in the future, not just music royalties, but you could buy maybe Apple stock in the future for really, really cheap. Who knows?
And just
qualify myself well enough with that, I hope.
I think so, but let me just add one last thing, that if the question is more specific to a lower dollar amount, for whatever reason you want to choose that lower dollar amount, I will point back to the new filtering features that were added in the secondary market that will allow you to filter to the range that you're comfortable with. There'll be few, but at least you'll be able to more easily identify them and make your decision that way, as opposed to having to scroll through almost 200. So,
but I encourage you, watch some auctions live.
Yes.
No matter how much you plan to invest, you should be able. One basic test is be able to, if you're married, being able to explain this asset to your spouse clearly and concisely. Explain the characteristics that make it what's a good investment versus a bad investment in this asset class. Like if you can't articulate all of those things with some confidence that's compelling enough to your own partner, then you're not ready yet. And I would encourage you just to watch more auctions, do some more research, we have published lots of articles on this. I encourage you just to dig in a little further. Ryan, anything else to add to that?
No, I think that sums it up. The secondary market, I know we iterated, that's probably the best place to get started. And I guess the one other point is you don't want to be a forced seller in a kind of a down market essentially, right? So just don't put yourself into that position if.
Yeah, what that means is that if you get overextended because, music royalties or gold or whatever is too big of a portion of your overall portfolio. If you have $100,000 and you have $50,000 of it in Bitcoin, you're probably very nervous about the price swings of Bitcoin day to day. And that's not a good place to be as an investor. So you want to make sure your position size matches, your in any investment matches your risk tolerance, so that if something, it's not going to cause you to lose sleep at night. Because otherwise that does put you in these positions where something might be going wrong in another part of your portfolio, and then you end up needing to get liquidity, and you end up making a bad decision on the sell side of the investment.
Okay. Well, thank you all very much. I think that's our time for today. It's all the questions that we had submitted. We're basically at 10:02 now, so I think that was great. Thank you all for your questions in advance. Thank you for your questions that were submitted live. As always, we will be sending a replay of this entire session to everyone, and it will be posted on our site for archival purposes as well, so it's always available. So with that, thank you very much, and until the next time, we'll see you then.
Yeah, thanks everybody.